Welcome to the first meeting of the new year for the Beech Grove Redevelopment Commission. Today is Thursday, January 16th, 2020, and the time is 7 p.m. My name is Kathy Chappell, and I am your acting president. Let's start introductions. To my far right.
Rick Skirvin, liaison to Beech Grove City Schools.
Dave Grenoble, appointed from the council.
Elizabeth Lamping, appointed, mayor's appointment.
Ed Bell.
Okay, first order of business is the election of a president, vice president, and secretary. I'd like to nominate Liz Lamping for president. Are there any other nominations from the board, commissioners? Rick?
Oh, I don't get
think
a vote.
No, I know, I'm just asking.
Oh, I have none.
If there's none, I'll second.
Okay. All in favor of Liz Lamping as president, say aye.
Aye.
Opposed, same sign. Okay, Liz, you take over.
Okay, we'll start with the reading of the minutes.
No, Vice President.
Oh, I'm sorry, Vice President. We're going to now vote on Vice President for the RDC.
Again, I nominate Ed Bell as vice president.
I second.
Any
All
other
those
any other nominations?
Any other nominations? All in favor signify by saying aye.
Aye.
Aye. All those opposed? Same sign. So Ed Bell is Vice President. So we'll move on to Secretary. We're now going to vote on Secretary. I nominate Kathy Chappell. We have a second?
And I'll second.
Can't nominate anybody.
Okay, I'm sorry.
I'll nominate.
I'll second.
All those in favor signify by saying aye. Aye. Those opposed, same sign. And we have aye, so Kathy Chappell will be secretary. Thank you very much.
I'm used to it.
Thank you. Now we will vote on the minutes from the previous meeting, November 21st, 2019. They did not have a meeting in December. So everyone has an opportunity to look over the minutes. Any corrections or changes in the minutes?
I have none.
Any other changes or opportunity to look at the minutes?
I wasn't here, so.
Okay, so none? So
Okay.
all those who would approve the minutes, vote with by saying aye.
Aye.
Aye. Those opposed, same sign. So the minutes have passed. Thank you very much. So now the next item on the agenda is voting on accounts payable. We have on the docket this evening, accounts payable in the amount of $298,368.42. I will go ahead and read line by line item. We have Regions Bank Equipment Finance appropriation. This was RDC 2016 bond principal, refinance 2005 and 2007, in the total amount of $250,000 and 0 cents. The second is for Regions Bank Equipment Finance, RDC 2016 bond interest, refinance 2005 and 2007 in the amount of $12,300 and 0 cents. Next is Taft, Stettinius and Hollister LLP, and that's for acquisition of rights for the Greenway, RDC professional service in the amount of $5,475.10. Second is Taft and Stettinius and Hollister LLP, RDC professional service in the amount of $9,245.00. Next is Peters Municipal Consultants, RDC professional service, that would in the amount of $1,424.37. Next is Lewis and Capps, RDC professional service in the amount of $5,678.83. Next is Lewis and Capps, RDC professional service $442.00. Next is Lewis and Capps, RDC Professional Service, $4,484.12. Next is Lewis and Capps, RDC Professional Service, $1,727.50. Next is Tim Showalter, who runs the meetings, who does a videotaping, that's RDC Professional Service, $225.00. Next is Beech Grove Sewage Works, RDC Professional Service, actually appropriations, Professional Service, $18.75. Next is Beech Grove Sewage Works, RDC Professional Service, in the amount of $37.50. Next is Crossroads Engineers, PC, RDC Professional Service, $5,150.00. Next is Crossroads Engineers, PC, RDC Professional Service, in the amount of $2,160.25, for a total of $298,368.42. And if everyone's had a chance to review this docket, we need a vote to approve the payment of these accounts.
I have a question, Madam President.
Yes,
The docket that you have, you said does not have Crossroads Engineering on it?
this is the docket that was presented to me. If there's any questions regarding that, I would have to ask either the attorney or the mayor if he could explain that for me.
Well, the reason I'm asking is the docket that I printed off the webpage shows Crossroads with two outstanding invoices, but the balance is exactly the same that you're showing.
Again, I would have to ask the mayor. I do not know.
But they total the same.
Yeah, I mean, it's,
I don't know why it's like that.
yeah, the total on this one is the 298,300.
368.42.
And you
Yeah.
said you got that from the clerk treasurer's office?
I actually got that off the webpage under the, from the RDC, and that's why I'm asking. If your balance is the same of the 298,368, I'm just wondering if they omitted it, but it would change the balance of your docket.
That I do not know, yeah.
We just got the docket today.
I understand, I understand.
Well, if it's not on here, we can't pay it, so.
But does that change the total would be my question.
Well, I would have to do some research and see exactly what it is that, an explanation of that. You're saying you got that from the clerk treasurer's office?
No,
and
ma'am,
it's on-
I
or it's
said
on
I got it
website.
off the
It's on the
webpage.
website.
Yes,
It's
ma'am.
on the, I would have to reach out and an explanation. I do not know why why there's a discrepancy.
I can come in the office tomorrow and talk to the clerk treasurer.
Okay. And
So,
then the other question that I have, and I know it's very minor, on the sewage works, there was two bills, one dated October, I believe, and one dated November, or one dated November, one December. And it looked like the balance was carried forward from the one. So I'm wondering if we only owe the $37, not the 18.
I know we didn't, they would have paid bills. There was not a meeting in December, but they would have paid bills.
Right.
So, again, I would have to check with the clerk treasurer and see. So you're saying on the website or
No, I'm.
No,
on the,
No, the December was
yeah, the December,
Which we wouldn't have had a docket because there wasn't a meeting.
exactly.
So, if you look at the two bills,
actually, that's 3 times 1875, so it's probably October, November, and December.
okay,
You see what I'm saying? As I write this down, 1875, if you double it, it's at 3750, so that's October and November, December were combined. Because we didn't have a meeting in December.
okay. Here's just the two invoices that I'm, the 1875,
what's the date on that?
and then there's another one for 3750.
Now, again, I still believe this is 2 bills in one.
Do you think one is for December and one is,
Yes,
okay?
they went ahead and
Well,
added
what's the
December.
other one for, the 18?
What's the date on these?
October,
Okay.
November, December.
Okay,
Okay, so that, the
I'll
dates,
get back to you.
okay.
The dates
No,
are on
that's
those
fine,
invoices?
that's why I'm asking. No sense of paying twice if we don't have to.
so then, we cannot pay this until we find out.
No,
We can go ahead and have a vote. We need to take a vote to approve the accounts payable for the amount of $298,368.42. Can I have a motion to approve payment of these bills?
I make a motion.
And I'll second.
All in favor signify by saying aye.
Aye.
Aye. All those opposed, say same sign.
Aye.
So motion carries to make a payment. So we need to sign.
No, we signed that
So you
document.
sign this one here. Okay. So I go ahead and sign it as well.
Correct.
Okay, right here. Okay, and then we signify, do we put a yay or nay on here?
No,
No, doesn't matter, okay.
Where we said the
Okay. And then we give that over to, that goes to clerk treasurer.
this goes to clerk treasurer.
And then no other signatures then? So this goes to clerk treasurer. So, on old business, that finishes payment of our, takes care of payment of our bills. For old business,
Forget this one. That's one.
okay. We would just like to have Jeff Peters come forward, if he wouldn't mind, and just kind of explain to the new members a little bit about our RDC and
We have three new people sitting here.
Well, thank you for the opportunity to be here, as always. You know, a little background on your redevelopment commission, and I'll kind of sum it up pretty quickly because it spans a lot of time. But you originally had two TIF districts established, one for Amtrak in that area and one in South Emerson, in hopes of development to come in. At one point in time, you got the development of the Walmart and the Lowe's primarily. And at that point in time, you consolidated your TIF districts, both the Amtrak and the South Emerson, so that you could use your funds in a larger geographic area. And as part of that combination, you expanded up Emerson Avenue. So Emerson Avenue today looks the way it does because those TIF monies, when it was either the city or the state came through and redid Emerson Avenue, the Redevelopment Commission put forth funds as well to put in the medians, make it decorative, not make it look like a prison, as we all remember years ago when you drove into Emerson looking at Amtrak, that's what it looked like. You know, now you have those facades, and you have your gateway entrance and so forth to Main Street. Later on, I believe Main Street may have been part of an extension of the TIF district as well, to allow money to be spent that way. I think some of your Main Street projects or grant matches were partly from the Redevelopment Commission. You also have a separate TIF district in the St. Francis, the old St. Francis Hospital area. That does not really generate any money at this point in time. It has only generated a small amount of money, but it was put into a TIF district in anticipation that the St. Francis would go from non-taxable, because it was a religious exemption, to something of value, and you could capture that increment and then develop or redevelop out from that area with the revenue that would be generated from that. That redevelopment district or TIF district remains intact today, but again, it's not really spinning off any money. But if you get a development project there, it's already set up, ready to go forward. The newest acquisition to your TIF areas is part of the Amtrak properties or previous Amtrak properties, and it's a little bit north of the main facility, but you had properties that were included in the TIF district and others that were not currently in the TIF district. You have a potential client and user that's going to go in there and now develop revenue in the TIF model going forward. So what you did late last year as a redevelopment commission was establish this new area, partly by carving out the old areas that had virtually no assessed value. Because remember, in this mechanism of TIF and how we generate funds is you take an area that you think is going to develop or redevelop or needs development or redevelopment, and you measure what the assessed value is at the day you establish the area. That underlying tax base continues to generate revenue for the school, the county, the city, the township, the library, et cetera, as it always has historically. Then any increase in assessed value, in real, and in some cases personal property that occurs in that area, you apply the taxes to that incremental growth in assessed value, and all that money comes to the Redevelopment Commission for you to continue to work through your redevelopment plans and projects and to fund those different activities. So for that new milestone area as it develops, you've now captured that, you've carved out some of these old parcels and put them in a new parcel or in a new TIF allocation area, so that when that development occurs, you will begin to collect the revenue stream. The revenue streams have a sunset on them. The current sunset would be 25 years from the first obligations you issue against that revenue stream. Today, you know, there are none, but if you were to issue bonds or have some sort of lease agreement, then that 25-year clock would start to run. Strategically, one of the things the Redevelopment Commission did last fall was to carve out those parcels that had been sitting in there since the early 2000s that were set to expire in 2030. So you were going to be looking at a 10-year revenue collection window, where today you're looking at a 25 to a 30-year collection window. That will be advantageous, obviously, to you as the Redevelopment Commission, as you'll have those additional funds throughout that period of time to undertake projects for the redevelopment and economic development in Beech Grove.
So all those clocks can be staggered then, depending on when that development starts bringing in the revenues.
You have staggered clocks in that the main areas expire in 2030. You've got some that expire, I believe, in 2034 from the expansions and the St. Francis area. This one will go, like I say, 25 years from wherever you issue your first obligation. And if you have any other developments that occur like that, you may again want to do that same thing. Those revenue streams allow you to issue bonds. If you have large projects that you need to spend a lot of cash up front that are going to benefit many years, such as Emerson Avenue, Main Street, the Greenway, things like that, you can take those revenue streams and pledge them toward bonds across that time period. That's what you did as a redevelopment commission in 2005 and 2007. And you will see those bonds pay off in, I believe it's 2021.
I think so.
And the
2022. It's January 2022.
January of 2022. As part of the bonding process, you always want to pledge securities towards those bondholders to make sure that they're paid back. One of your securities that you put forward was a debt service reserve fund, which was $240,000 in cash that is sitting there. Those will make the last 2 or so payments of your bond payments. So in 2022, you won't need to allocate any of your revenue stream toward debt service because it'll be paid from this debt service reserve. And I'm estimating about 108,000 of the 2021 debt service will be paid from the reserve fund as well. So you're getting to the end of that cycle. That cash comes back into your model. That'll reduce your debt service payments across those couple years. And then I do, I'd take any questions regarding that, but after we get done with that, I would like to update you on a couple things.
Okay.
So
There's 3 areas that we're not receiving any revenue from. Do you know what parcels are in, or what businesses are in 170 and 171? And I believe, is it 352 that's the hospital?
No, 170 and 171 would be the hospital related.
Okay. And then what's the 352?
352 would be, the three is Franklin Township.
Okay.
5 is Perry Township, 1 is Center Township. So I know 1s are the hospital. 352 would
Would probably be the
be,
CSX property.
could be, but it would be, do you have Franklin Township schools that actually touch here as well? Or is it just Franklin Township Beech Grove schools and Perry Township Beech Grove schools and Perry Township?
We have all
Perry
those
schools.
townships in Beech Grove, yes, sir.
Okay, so all those different 3-digit numbers are the tax districts. A tax district is the geographic area where you receive the same services from the same people or same government units at the same tax rate. So, you know, if you live on one side of the street and your Beech Grove Schools, Perry Township, somebody lives on the other side of the street is Perry Schools, City of Beech Grove, you'll be in 2 different taxing districts with 2 different numbers and 2 different rates.
Okay.
So I can't tell you exactly what 352 is, other than it's Franklin Township because it starts with a 3.
Okay. And I know that you got the same emails from Drew Carlson that I got.
Yeah, and that's the second thing I want to update everybody on when we get to it.
Well, since you brought this up real quick on the bond payments, just so you know, because I got this from the clerk treasurer, we'll owe July 15th of 2020 is 255, January 15th of 2021 is 260, July 15th of 2021 is 130, and January 15th of 2022 is 130. And it's my understanding, you correct me if I'm wrong,
Plus interest.
we have to, yeah, plus interest, but we can't use that debt service money until that's completely paid off, but that can be used to pay it off.
Yes, those last 2 payments will come from that debt service reserve, or most of the last 2 payments. Definitely the 130 plus interest, which is 131,560. That will be paid fully through the debt service reserve fund.
So in the future then, so that'll clear us of bonds at that time. That clears the RDC of all bond payments, correct?
Yes.
Yeah. So then in the future, if potential for bond issuance to help out with projects, then we would have to have reestablish that debt reserve service, correct? For those bonds?
You will, it'll be part of whatever debt you would issue.
Okay.
That will be part of the security that you give to the bondholders.
Does it depend on the amount of the bond?
Yes.
Okay.
It is, it's a 3-pronged test. One is 125% of the average debt service. One is the largest debt service throughout the period. Not sure what the third one is. I think it's a percentage of what the bond proceeds are. Might be 1%.
Is there any discussion on continuing the obligation for that, that drops off in 2021? Has there been any discussion on that?
You can't continue it. You would have to do a new one
What-
from scratch.
Yes, but what I'm asking is when is the soonest that Lowe's, Walmart area, when does that drop off of TIF? Yeah, that obligation.
Well, the obligation of the bonds expires in January of '22. The TIF district itself expires in 2030.
2030, okay, that's my question.
So it would continue to collect through 2030 unless you, as the redevelopment commission, take the action to release that assessed value back to the tax base. And in our annual meeting, we kind of talked about that. You know, there are always questions about the TIF money as it's collected. And we'll use ballpark number, $800,000 a year that you would collect in TIF money. And people say, you know, I'd really like for that to come back to the school and come back to the library and come back to the city, et cetera. Well, if you release that assessed value back to the tax base, that's your only option that you have. That is not taking the revenue and sending it back to those units of government. It inflates the assessed value in the tax base, which in most instances lowers everyone's tax rates, because the majority of property taxes as they're levied are based on a statutory formula. So it increases every year by the 6-year average growth in non-farm income, which for last year was 3.5%. So every year that levy might grow 3.5%. If you shove a whole bunch of assessed value back into the tax base, you're just going to lower the tax rates that typically were used to generate that amount of maximum levy coming back in. So in the scenario of giving back all that money to the tax base, you benefit those units of government by about $200,000. So only a quarter of what you could give back in its entirety benefits those units of government. So conventional wisdom is, if we can collect $800,000 rather than giving back $200,000, we're going to do that every day that we can, and we're going to do projects that are beneficial to the development and redevelopment of the community. Because the best way to decrease tax rates and grow your community is to make those expenditures in infrastructure and the like that draw development to your community, so that you have real taxpayer dollars that come in and build these facilities and build housing and things like that, so that you then have an exponential growth in assessed value that allows everybody's tax rates to go down.
I have one more simple question.
Certainly.
Simple as in like my simple mind. When the obligations drop off, when a TIF district drops off, is it, if the board decides to continue on with that, is it reassessed?
No, they can't continue.
When it
When it gets
it's
to
done,
that
it's done?
expiration period, it's done, and that example I just gave you
Right.
happens. So you go from collecting $800,000 a year to now all the assessed value goes up, tax rates drop. You're gonna lose $600,000 a year as a community, because you're not gonna collect the 800, but 200 in benefit is gonna go and be spread between school, city, library,
I didn't know
township, et cetera.
if there were things that you didn't get done and you wanted to, it was still a blighted area, if the community deems it that if you could go back and say, you know what, we want to continue doing this, so we're going to reinstate a TIF district in this area,
Can't reinstate, but you can reestablish.
reestablish.
So you can do a new one, or like we did last fall, carve out certain areas that haven't developed,
Okay,
and then you could set that up into a new TIF district, and then it will have that same new sunset.
and when it's reestablished, it's reassessed?
It's at the new level.
Okay,
Yeah, so if, you know, if there were an extra 30 acres attached to the Walmart,
right,
if you reestablish that area, now instead of having the base when it was blank and then had that one old church on it, now it would be whatever the Walmart area is. But then, if you had another development on top of that, you could collect that increment. But all this base now would be shared between all the units of government.
right, okay. Thank you.
Jeff or Bob, either one of you, and I know you're at the podium, so I'm gonna ask both of you. If we were to establish or try to get another bond for another project, can that only be used on property that's in a TIF allocation or TIF area? The bond money?
It has to benefit, and that would be a legal definition as to how it benefits.
There's 2 or 3 statutory provisions that govern that. One is redevelopment within the TIF district. that's a bit of a, you know, a gray area of what's physically connected to, but certainly a major thoroughfare that feeds let's say a business commercial area is physically connected. And then if it benefits it, and that's the grayer of the three, does it benefit? And there's certain things that certainly benefit everything around it. In other words, and I think good examples of that are things relating to your schools and your parks. I mean, if you're talking about wanting people to buy homes and the home prices to go up, or they want to build a new small subdivision or whatnot.
Mr. Rudd, I apologize. I don't think they can get you on tape. Do you mind coming to the podium? I'm sorry. I think that,
They can't hear you.
He just came out
yeah,
and
you just came out.
pointed
I
to the,
apologize, yeah.
I was just saying that
Yeah.
certain things benefit the TIF districts in which they're surrounded by, even if they're not physically within. So if it's physically connected to, if it's in it, or if it benefits it, and in one case, it's a direct payment. It has one phraseology, and the other is if the unit, meaning the city, makes expenditure, they can be reimbursed under another phraseology of benefit or physically connected to.
An example of that would be our Greenway.
That's a good example, yeah. And the Greenway goes through a number of your actual TIF districts, because the parks are both in the TIF district.
And for the audience to know that a Greenway clearly benefits the community as far as assessed value and progress. I mean, a Greenway has been proven from, you know, as far as research, that a Greenway certainly does promote the growth and the well-being and just housing and everything in a city.
It certainly has increased the value of the homes near the Monon Trail,
Yes.
at least.
But it was a railroad, so you could put gravel down and get rid of the railroad tracks, it would increase in value.
That's perhaps.
Let me give all the commissioners a color photo of, it's an aerial, but it's been color coded. And it has the three main TIF districts.
Perfect, perfect. Perfect.
The consolidated, which is or it's called
Good.
expanded, which is in red. The blue, which is the Beech Grove Medical.
Okay.
And then the yellow is the new TIF district
Okay.
that has to do with CSX and the milestone development.
Mr. Run, when you were talking about the gray area, so who would decide that gray area? Who would you go to?
It's basically a legal opinion. Certainly, if we're uncertain about our legal opinion, sometimes we might go to an organization called AIM, which used to be called Association of Cities and Towns. They have a couple of on-staff lawyers. There's an association called the Redevelopment Association of Indiana, which I was going to suggest that the commissioners join. It's not joined by the commission collectively, but you have to join individually. Your first year, it's $25 each. Then they spike it up to $125 after your first year. But we would strongly recommend that, and they have programs, mini seminars and things like that.
And what was the name of it?
It's called Redevelopment Association of Indiana. I can hand out an application thing for you. Anyway, I'll let Jeff finish his presentation.
okay, thank you.
Sorry, Jeff.
Problem. So do we have any more questions on that, or you want me to go into my other updates and new information?
I have a question. If
Yes, ma'am.
the property that's where the St. Francis Hospital was on Albany, if somebody should someday buy that property and build on it, if it's not some type of medical facility, would then TIF money be established again for us?
I don't think it's restricted to a medical facility. I think it's any incremental growth.
As long as it's not an exempt owner, such as a church or a school
Or residential.
or residential.
Right.
Unless it's large multi-residential, if it's more than 4 units, then you can.
Then that's actually commercial.
You can
You can
capture?
Well, before the hospital was torn down and they actually leased part of the floors out to
Yeah, we got
private
tax
entities, we were actually getting money from
Right.
that.
I knew that.
when we had the rehab center. But keep in mind, St. Francis has a non-competing clause for any development in that
Right.
area, so they're certainly not gonna bring in any kind of a medical that would compete with their growth.
Ready for an update?
Update.
Okay. Collections in 2019 were down, partly due to a series of property tax appeals that were settled. So you had $60-some thousand in tax receipts that you otherwise would have received, but for the settlement of these appeals in favor of the taxpayers. And some of these went back a few years. There were 3 properties. One was Beech Grove Senior, I think, LLC. One was Walmart, and one was the Don Corporation, DHAN, which I believe is the Super 8 motel in front of the Walmart and Lowe's. So between those 3 entities, they got their assessed values knocked down, which is going to affect your revenue stream going forward. And there were monies that they had previously paid in their property taxes that were then found in their favor, that they were overtaxed. So that was the 60-some thousand that had to be paid back in the fall 2019 distribution. So in that regard, you are shorter cash-wise than you would have thought you would have been, or we would have thought you would have been at this point in time, and your revenue stream going forward is less. Today, we know what the assessed values are for 2020 to generate the tax bills. We know what the tax rates are for 2020 to calculate the tax bills. The third big part that we don't know are the circuit breakers that are going to be applied, which are those 1%, 2%, and 3% tax caps, against that revenue stream. Tax rates from 20 versus 19 have gone down considerably for the taxing district. Actually, they're down about 60 cents. They went from like 5.31 to like 4.75. And a lot of that has to do with the school's tax rates on property. As those numbers fall, the overall TIF revenue falls, but also the circuit breaker impacts that offset those TIF revenues fall as well. So we don't yet know exactly how that's going to fall out. Should know late March, early April when tax bill time comes. The circuit breakers will be calculated. We'll know what actually got billed. And why I'm telling you this is the appropriations that you made in the budget for 2020, you have committed to your debt service as always. You have a greenway project that you are going to put forth money toward, and the sewage project for your new redevelopment area. I think everything's gonna work out okay. You're gonna be really close to going through all the cash that you have in 2020, which is fine because that's what you're designed to do. And then again, in 21, your debt liability goes down. If you don't have other projects, you're gonna have more money. And then in 2022, you basically have your entire revenue stream to commit toward projects or accumulate that money for future projects. If during 2020, and we will update you, that we think you're gonna be short, we'll have to come up with some other mechanism, maybe some interfund borrowing with the city in order for you to meet those commitments to get those projects done. And then out of your future revenue streams, you'll pay back the city accordingly. But like I say, at this point, I'm anticipating you'll be close, but it should cover. If not, we'll update you as we go forward. And again, that's, not an insurmountable goal. It's just a wrinkle to get to where you're trying to be.
So what you're saying right now, what we've already obligated to, and that's the milestone and the greenway, that's pretty much where we are for obligations for outgoing monies right now.
Yeah, for 2020, that pretty
2020,
much
okay.
commits your funds,
Okay.
all of
It's
them.
our funds, okay. Okay.
So, going back to the emails between you and I, Mr. Carlson, and what you just talked about with the assessed values, are we in trouble in any of these areas that have reduced so much down closer to where they were in assessed value? Like the examples that he gave, that the one area was 1.8 million and now it's 757,000, and the other area was 1.5 and now it's 1.2. And are we in trouble of having to reimburse from the baseline the schools in the city if it drops any lower?
No. It goes to you. When we set that base, you collect any of the increment.
Right.
If, and the examples Drew gave have to do with the St. Francis property area. If they drop down here, everybody suffers that loss. You don't make up the difference for that. You're not ensuring to all the rest of the tax base that it'll always be here or above. You just went in, staked your claim that anything above, we get to collect.
Okay.
So you won't have the payback, but, we talked about if we have development in an area there, we may want to do certain things with those parcels if we have a couple dogs that are negative and cut them out, start
Burn
them
them
at a
out.
lower base and start over.
Yeah. Bob, I need to ask you another question with what he just said. Based on what I'm reading from the 2017 RDC Development Members and Lawyers Handbook written by Barnes and Thornburg, we would have to reimburse the schools in the city because we set a baseline. So I want to make sure that there's an understanding there that we're not on the hook if that assessed value continues to go down or goes below the base, that we're writing checks to anybody.
There's nothing that I'm aware of that would require that result. I'll certainly look at it again. I do have the Barnes-Thornburg handbook, and can see if I can look at and see what you're seeing.
Okay.
But these changes are not just for this is statewide. This is not just Beech Grove that you're talking about, that communities are having lesser amounts of revenue, of monies. This is,
It happens everywhere.
Happens
And you'll
everywhere.
have,
So it's
even within the same TIF district,
Yeah.
you'll have winners and losers.
Yeah.
People who appeal and have those appeals granted. Typically they're not as significant as some of the stuff we're seeing in the St. Francis area. But again, my understanding, unless Bob tells us different, is that you have no commitment where it goes below the zero. You just collect zero.
and I'm guessing those fluctuations happen throughout time. I mean, this is not the first time.
They do, and the biggest thing over there is, as you got rid of some of that assessed value that had become taxable and had a base, or was originally taxable at a base, that has now gone away. If today something went in there, we would actually have to offset that negative with any positives. And that's why I say, if something were to go in there, we would probably want to revisit the mechanism that you used in the fall, which was to re-identify areas and base them at their current value today, and then harvest the increment as it came forward.
And to your question, according to Mr. Carlson, he's had several calls. Speedway, Lawrence, and Carmel had all had issues. Everybody got hit with tax.
Right.
Everybody. So, but is it your recommendation or not that we need to look at some of these that are dropping and pruning, or is it too early to look at that?
You could do it proactively, I guess, if you wanted to prune it out. But again, you should know with sufficient time if something's gonna go in there and develop. Just like last fall, when you made those decisions to lock in the base, because you did it before December 31 of 19,
Right.
The assessment date that is the new base goes back to January 1 of 19. So we get to look back to that last assessment date. Now, of course, if we're in late January or February, we only get to go back to the last assessment date, which would be January 1, 2020. So unless there's a liability that Bob comes up with, I would just say leave them until you have some sort of activity, because pruning them, I don't think makes any difference to, well, I shouldn't say that. If you have other development out there that you think would be positive, and there was a slight positive prior to these, if you pruned off the old ones, you may have increment in a little bit going forward.
And when you say referencing pruning, we are already obligated to what we've established. We're going to, we're obligated to these projects. So, I mean, I guess I'm.
Yeah, we're talking about pruning parcels
I got you.
that
Okay.
are
I
losers.
see what you're saying. Okay.
And, you know, speaking of obligation, all the parcels that currently contribute to the payment of bonds, you are bound to keep those because that protects your bondholders. To the best of my knowledge, all the parcels in the St. Francis area are not pledged toward the payment of the bonds. I think they are separate. So, those at this point, pruning off losers, you know, would not impact the bondholders because they're not producing any increment. And there might be a little bit of benefit there. And if you would like, you know, we can look at that going forward.
Just by way of example, the CSX property, the total assessed valuation of the new TIF district was $700, not in
Yes.
taxes, but in
Yes.
assessed valuation.
Yes.
Right.
So you're talking about, what, $7? I mean,
I'll give them 800.
so, that's what, you know, that's what we're talking about, prior losers. You can only benefit. It's not hurting anybody by doing that.
But on that CSX property, Bob, since you brought it up, they've been given tax abatements for 5 years, so we wouldn't see any revenue from that for what, 6 or 7 years?
5 years on the improvements that they make. The underlying real estate is still taxable, is not captured, doesn't have much value. And the personal property that they might bring with trucks and moving equipment is taxable.
Okay,
There may be some value,
okay.
but not the buildings they're gonna build for 5 years that would be abated.
Okay, all right,
And we didn't grant the abatement, that was at the county level.
okay. Jeff, just to clarify, because we've thrown a lot of stuff out, with the shortfall that we had that you and I talked about, we about $119,900 short of what we had projected. We were gonna have starting 2020. And we just paid $298,000 in bills, which takes us down to like 330 or 297,000. And you still see us getting enough tax revenue to do these projects, pay our bond payments and our monthly expenses?
Hopefully. Like I say, it'll be close. If you spend the full 600 that you've appropriated for the CSX and the 245 for the Greenway.
I have a question on the 600,000.
We have, I'm sorry, Pam, we have a sign-up sheet. We had a sign-up sheet for people to
I've
sign
already
up.
signed up.
But when, and we will get to that part of the meeting.
I'm sorry.
Or we can get, can you come up front?
I certainly can.
Thank you.
My
And then,
question was directed to
and you can
this
tell,
gentleman.
if you don't mind, tell us your name and your address.
Pam Stallard, 711 Churchman Avenue,
you.
Beech Grove, Indiana, 46107.
Thank you so much.
Now, what I was trying to ask you, since we have committed ourselves to 600,000, you say we're gonna be very, very close. I've just listened to this young man up here. Did you or did you not say if we come short, we'll borrow the money from the city of Beech Grove? Did you say that earlier?
That is one option.
That's
You-
all I wanted
Yeah,
to know.
you can do other borrowings, but if there are funds within the city of Beech Grove, an interfund borrowing is cheaper because you can do it with
That would
a
come out of general
resolution.
fund.
Well, it could come out of a general fund, another fund, the rainy day fund, something like that. If you do it as an interfund borrowing, you can do it just in the form of a resolution. Then you don't have to have legal fees, financial advisor fees, bank interest.
Okay, thank you.
But yeah, that would be a quick and easy interim financing. And then when we get to 21 and we have excess revenue, or 22, those funds could be paid back. That way you would have made your obligation and gotten all your projects done. Hopefully it won't go that way, but yeah, I'll leave that up in the air until we see what the circuit breakers are.
So right now, you don't have any idea what we might see spring-wise, money-wise?
I did a calculation, and I changed the circuit breakers in the same relationship for 19 to 20 as 18 to 19 went. Because in 18 to 19, we went up in tax rate from like 517 to 531. In 19 to 20, we're going from 531 down to like 474. If that proportion holds true based on the assessment numbers that Drew gave us and the new tax rates, you'll collect about $761,000 in revenue.
In the spring,
No, total for the year.
total for the year.
Yes.
So what we will see in the fall, though, we will need money for the bond payment in January. And that money doesn't come till the end of December. So that's why
Yeah.
my concern was, we're just gonna have what we have now and whatever we get in the spring to carry us through the year, along with our obligations and our debt.
Yeah, and cash flow is separate than what it is you're gonna have and when you have it. So you may very well, in January of 21, have to have some sort of interfund borrowing to get you through that till you get to your tax distribution in June of 21. Cash flow is a different issue. We're looking at calendar receipts to calendar expenditures. And yes, you do have an obligation the first 15 days of each year for which you may or may not have cash for. But again, that's a cash flow issue, not an appropriations issue. But you're right, that is something that you need to be aware of, and if we get to that situation, we need to be able to work that out with the clerk treasurer's office and the city. And again, we have multiple options for cash flow. Interfund borrowing, again, is the easiest and cheapest, but, we can go today and it's called a tax anticipation warrant,
That's what I was gonna ask you, okay.
to get those cash flow funds ahead of time. Getting a tax warrant straight up, if you wanted to execute one this year, is relatively expensive. Again, you have bond counsel or legal fees or both, and financial advisor fees, and then bank interest. If we, during the course of this year, determine that maybe we do need money in 21 and we need to take it through a tax warrant because the city doesn't have sufficient funds to float you, what I would recommend, and what the city did in the past before they got out of their need for tax warrants, is you go to the bond bank. It is a cumbersome process, but it is a much cheaper financing, and they do big pools of units of government. So they're doing those throughout the fall. You can have an early distribution as soon as January starts, because every unit of government can do exactly what I just described, which is spend all your money and not have anything to pay your obligations January through June. So the bond bank actually has a program where you can, on pretty much the first business day of the year, take a tax warrant so that you can make payroll.
Okay.
And I know that is a horrible way to view things, but that is really the way the system is set up in Indiana, that you have expenses January through June, but you don't receive the bulk of your receipts until June.
Okay.
I think our city was close to that type of situation some years ago.
Well, you did tax warrants for many years. And, you know, and what I always tell people is, that's not a bad thing. It's not really a reflection of, you know, poor management or anything. It's on occasion, and over the last 25 years, I've seen this a lot. Cities and towns, townships, counties, et cetera, go through cycles.
Yes.
In schools. They go through these cycles of, you know, they have expanded services, and then they get hit with revenue decreases that they didn't expect, and they end up on the bad side of that cash flow. It just happens, particularly in growing communities, and as you expand and provide services that your people demand.
Thank you. All right, you have other things, you want to move on?
I believe that was my only update. I just wanted everybody to be aware. I did talk to Bob and the mayor about that on my way in, so they're apprised of that issue as well, and we'll update you as we get information throughout the year.
Mr. Rund, do you have any updates for us for the commission?
There's two or three things I'd like you to consider at least.
I think that the commission should consider a resolution that basically puts you on record that the commissioners will receive no salary and no per diem, but may be reimbursed for out-of-pocket expenses that you might incur in the service of the commission, such as if you went to a seminar with, you know, what used to be Cities and Towns. I'm still not quite sure what, I think AIM is Advanced Indiana Municipalities, maybe that's what it's.
Accelerated, maybe? Accelerated?
No, I think it's advanced.
Advanced, okay.
Yeah.
Okay.
And so I would suggest, and I've got a copy of this resolution, and I would propose that you consider adopting that.
Go ahead and read that into the,
Yeah.
read that in the record and then.
Resolution number 2020-1, be it resolved that the City of Beech Grove Redevelopment Commission hereby determines that no salary or per diem be paid any commissioner, but that commissioners may be reimbursed for out-of-pocket expenses incurred on behalf of the commission or directly related to his or her service as a commissioner, subject to the approval of the commission upon submission of a written claim with attached documentation.
So I make a motion, resolution 2021.
You can't make a
I
motion.
can't make, okay, I apologize.
2020-1.
2020-1. Does anyone want to make a motion to accept this resolution? 2020-1.
I'll make said motion on it.
1 second.
I'll second.
All in favor, signify by saying aye.
Aye.
Aye. All those opposed, same sign. And the resolution passes. And then we sign this and give this, and then we give this,
If you could sign at least 2 copies so we can get one to the
Okay.
clerk treasurer.
Okay.
And then I have another resolution for consideration.
Paychecks. I was kidding.
so he wants us to sign. Do we put our title in here? We don't have to do.
Who becomes a member of the association during his or her term as a commissioner. And I have a copy of the membership application form and a little bit about it. And again, it's $25 the first year, and then they spike it to $125 if you renew.
Okay. Thank you, sir.
Oh, I got two.
This is everybody. We get all these signatures.
There's only
Sign
4 of us that
okay.
can sign it.
I want to, okay, so somebody, okay, because. So then do we want to address the resolution?
It's up to the commission on whether they want to do that. You certainly have the right to apply and become a member without being reimbursed, so if you want to do it that way, either way is fine, but I'm just suggesting that it might be a good membership to have.
What's the benefit to this, Bob?
They send out information on redevelopment commissions. They have a small staff where you can call if you have, you want to bounce something off. They have many seminars occasionally.
Networking?
Yeah. For example, you could network with like Speedway or, other.
I'll make a motion that we accept.
Anyone have a second?
What do we make?
That we're going to,
That we can turn in the fee for this,
Yes.
should we choose to.
so this,
Okay, so you can turn it in, but you don't have to turn it in for a reimbursement, is that?
No, you can pay it yourself or you can be reimbursed.
Correct.
Yeah.
Okay.
I make a motion, is there a second?
I'll second.
all those in favor signify by saying aye. Aye. All those opposed, same sign. So resolution 2020-2 has been approved.
And just one other thing, we often, I think some commissioners may have filed this in the past. You don't have to file it, but if it applies to you, you should. Rick, I don't know whether it applies to the non-voting advisor or not. Probably not, but
Does that resolution apply to a non-voting member?
I think, yes, there,
Okay.
I think he could, I don't think they would keep him out of the membership.
Okay.
It might refer back to
And
the
that
school
doesn't
board
have
as
to be.
well.
Do what?
It might refer back to the school board if the school board, I wouldn't do it anyways, but
Okay,
That's all I,
Uniform
that's all
conflict.
I have.
not that I wouldn't join, I wouldn't
So
Yeah.
this is-
submit it for. Yes.
That's fine.
Okay.
Either way, it's just, and I know $25 is not
So this
a
uniform,
big amount, but next year, 125 might
Dave
be
said
an
he'd
issue
pay
to
it.
somebody.
okay. So this uniform conflict of interest disclosure, is this something, I apologize, clarify, is this something we need to do?
It only,
recommended?
if, for example, if any company that
Oh,
you're.
I see.
You might be an employee or a family member might be an employee of, or yeah.
So it's recommended that we go ahead, each one of us fill this out and then turn this into
To
the,
the extent that you think it might apply in the
Okay.
future.
okay,
And then it has to be accepted, so if you do, next month,
okay,
the commission can accept
Okay.
whichever ones, and then we have to file with the State Board of Accounts
Okay.
and with the.
so we can address this at the next meeting, we can. have
Hey,
that
Bob,
within
before you get
hours.
away from the microphone, real quick,
So then this will be
with the obligations or the commitments that was made by the RDC for the
unfinished.
money for Greenway and the money for the sewage pipes, is the RDC contracted with the vendors or with the city to cover those expenses?
The only contract that I'm aware of that we currently have as a contract was with Kevin Parson and Associates, who was the landscape signage architect that we were going to use at I-465 and Emerson.
Okay.
But all of his proposals came so high in terms of his estimates that that's not active now.
Okay,
The other contracts, to the best of my knowledge, are in the name of the city.
okay. So we're not contracted with any of the legal people that are doing things for the Greenway or the sewer or any engineering or any excavating companies?
No, we don't have any direct contracts with those. Kevin Parson, who, again, was the landscape architect for the I-465 Emerson interchange, which we decided all of his proposals were too high.
Okay,
That's the only direct contract that we had. And then there's an engagement letter with our firm.
okay. All right. And Jeff, it reminded me of something I wanted to ask you and I forgot. In your outline of what you thought 2020 was. There's a line in there that says we have $80,000 coming back from something. It showed as income or revenue.
Yeah, that was a number that Donald had given me, that you had $80,000 that you were going to be reimbursed back in.
Okay, do we know if or where that's coming from? Okay,
Did not know.
So that may or may not be real.
I don't know.
did not know, no.
Okay.
And you got that information from Mr.
No, it's actually in his projection sheets for what he
Yeah.
thought.
When the
There
budget
was
was
two
put
sources
together
of
for
revenue, tax
2020.
revenue, and then the $80,000 for, yeah.
So we will ferret that out as well as we progress through the year.
Thank you, sir.
Thank you.
So that concludes old business, and then we have citizens who had signed up to speak. We have Anna Ottinger. If you want to come forward and state your name and your address, please.
My name's Anna Ottinger, 2141 Man Drive. I have a couple questions about the members on the board. One being a conflict of interest with Tara. I know that you stated that there was no conflict of interest, but her husband was just a employee, but now he is a partner.
Yes, ma'am, that's correct.
So,
We found that, go ahead.
right, and I think that's a big conflict.
Can I take this one?
Well, I can clarify for Mrs. Ottinger, Anna, that has